Good afternoon, everybody. We will wait just a couple more moments and let a few others jump in from the waiting room, and then we'll get started. All right, good afternoon, everybody. Welcome to our webinar entitled Don't Be an April Fool, Avoiding the April Tax Surprise. My name is Aaron Wall, Executive Vice President here at iTValuations, joined by my colleague Greg Northrop, our Director of Tax and Finance, as well as the Managing Partner of IT Tax Advisors, and by Becky Brown from Stride Accounting and Tax Advisory. Becky, great to have you on the webinar. Thanks for coming.
Great to be here. Thanks for having me.
For those of you who have joined our webinars before, you know that we're known to give away an Amazon gift card or two on a webinar if you can answer a trivia question. And so the next slide actually asks a question about our guest, Becky. And I evidently skipped by it too fast. Let me go back. There we go. The first person to correctly answer this question in the chat will actually win the $25 Amazon gift card. And that trivia question is, what is the nickname of that Becky gives to the grouping of her three sons? And if there's like, how in the world would we ever figure that out? Could I have a hint? Yes, you could. And the hint is, think of a yummy dessert. Don't overthink this. You don't know Becky very well, but you should be able to guess this. So that's all I'm going to say. So first person to put that in the chat, they'll win a $25 Amazon gift card. And we'll get that to you after the webinar. So a couple of housekeeping items before we get started. Becky, you'll be there too, right? In a couple of weeks in Chicago? Yeah. So actually,
no, I won't be I'll be at IT Nation. Not
IT Nation.
In November. I'm not at
Well, you can stop by and see Becky in November at IT Nation in Orlando. But in a couple of weeks, Greg Northrop, who's on the webinar, as well as Reed Warren, our CEO, will be in Chicago at the ConnectWise Evolve meeting. So if you're a part of those peer groups, would love to schedule a time to connect, maybe grab a drink or dessert or coffee with Greg or Reed. You can just reach out to iTValuations on our website and we'll set that up. In the middle of those two peer groups, there's an IT Nation Grow event, which is an M&A event. Greg speaking at that event as well, other industry leaders around topics related to M&A. So we'd love to have you think about stopping by and registering for that event. It's not our event, but we think there's a lot of value and education in the event. So we'd love to touch base with you if you're in Chicago in a couple weeks. Don't know if the Cubs or White Sox are in town, but that's something you can look into as you look at your travel schedule. We have a good number of webinars coming up. In fact, our next one's in about 3 weeks, and I'll be interviewing the CEO of Optimal Networks, Hainan Landa, on finding cultural alignment and setting up acquisitions for long-term success. As part of our webinar series last year, we talked about the transaction journey, and we kind of stopped the transaction journey really at the point of acquisition. But the reality is the fun starts really after acquisition, and integrating companies and making sure culture is aligned is something you need to do obviously before the acquisition. And it's something you continue to work on even post-acquisition. So Hainan Land has made some acquisitions, is really passionate about culture and the role that culture plays in long-term success of organizations. So I'll be talking with him on May 15th. Would love to have you join us for that conversation. And maybe after today, you're like, I need another webinar on tax. I just can't get enough of taxes. Well, good news. In May, we have another webinar on how to keep taxes top of mind. And you're like, I don't want to do that in the off season. And Greg will tell you why you should. Okay, so keep that in mind. That's in May. And then we'll also, at the end of May, be hosting a conversation with Robin Robbins of TMT, and we'll talk through the growth and marketing drivers of value. And so we'd love to have you register. Again, you can register iTvaluations.com/webinars. Free registration. Recordings live on their website and on YouTube. And so if you miss one, feel free to catch up from that perspective. For those of you who may not be as familiar with iTValuations, we are a business transformation company who does valuations, buy-side, sell-side advisory, mergers, and then we also have a CPA firm called IT Tax Advisors. Greg is the managing partner of that group. And then we're launching a new peer group in the fall called Value Creation Academy. More information coming on that in the coming days, but you can check out our website if you want to get more information about that. Want to go ahead and introduce our speakers for today. Greg, why don't you introduce yourself, talk a little bit about what you do here, and then we'll have Becky do the same.
Yeah, thanks, Aaron. Greg Northrop, iTValuations and IT Tax Advisors. Been with iTValuations since September of 2023. Thought I was leaving my 10-year career in public accounting and working in tax to come do acquisitions and valuations here, and then decided to start IT Tax Advisors in July of last summer. where we really focus on, providing IT service companies with tax compliance, consulting, and advisory services, in addition to all the valuation services that we're doing through our VAS app and whatnot. So pleasure to be here.
Thank you, Greg. Becky, I'd love to have you introduce yourself and talk a little bit about what you all do at Stride.
Yeah. I'm Becky Brown with Stride. Stride is an accounting firm that is full stack. We do accounting, we do tax, and then we do advisory. So we handle the accounting with the tax return in mind. So we make sure that we can get your books done to make your tax return getting done easier. But really where our value comes in is helping companies eliminate their cash flow fire drills. MSPs especially have a hard time with all of the things that they need to do, and then spending their time being a roadblock in accounting doesn't help. So what we do is we try to take them out of the roadblock by building really good processes around accounting and then managing it for them.
Fantastic. If you're interested in getting more information about Stride, obviously QR code there in the bottom right corner of the slide. I would love to have you guys check that out and talk to Becky and her colleagues. Well, let's dive right in. Obviously, a play on words here with the April Fool piece. Greg, you and I sit down months in advance. We try to plan out each quarter what our webinar series is going to be, what our content strategy is. Maybe talk about the genesis of this topic and the timing for the conversation today.
Yeah, when every year it seems like, specifically when I'm doing tax returns, trying to get everything done by April 15th, there's usually at least one client, if not a bunch of clients, that I end up being the bearer of bad news. That I have to let them know that, hey, they have a large payment due by April 15th that they weren't expecting. And a lot of times it's not necessarily my fault, nor is it even really their fault. It was just, there was no clear understanding of the numbers that were leading to their tax liability. So really the genesis of this conversation is, what are things that you can be doing now throughout the year to get a better understanding of your numbers so that you can actually be advised and in the know of where you're standing all the way throughout the year, especially as you get to the year end, so that you're avoiding surprises from a tax standpoint. You're also just avoiding cash flow surprises in general. But obviously the tax one can sometimes be the biggest cash flow surprise, because if you're not planning for it, you're not ready for it, that's a pretty big tax payment. And then if you get behind on that, that's a circular situation that just never ends well, where you're constantly playing catch up on your tax payments. So really wanting to try and get ahead of this, and then bring in a resource in Becky and her team of what can they do with your company to help prep you in advance, so that you don't find yourself being the bearer of that, the receiver of that bad news.
Yeah, Becky, you're talking with business owners all the time. So what are the common things you're hearing, this time of year as you talk with business owners?
Yeah, so we're a third of the way through the year in 2025 already, and I think the most common thing I hear is, okay, now tax returns are over and I don't have to think about taxes until next year. And that's just, they're thinking about it, and like what Greg said, always playing catch up. The only thing that you can do to reduce your tax liability for this year is during this year. You can't do anything in April of 2026. So now that it's April of 2025, you have 9 months left of the year to make smart choices and smart decisions to hopefully reduce your tax liability. And if not reduce it, at least know what it's going to be. Like Greg said, don't get surprised. A tax return should really just be putting numbers on a piece of paper. It shouldn't be so hard if you're keeping your books consistently and accurately through the year, because you're closing every month. December is just another month, and tax returns should be able to be filed, especially for a business, in January.
So people are fatigued, right? They maybe went through a dramatic tax season, and so they think I can just put it off to next year. Like you said, I mean, we're over 4 months into the year. So what should they be doing right now? What are some practical ways? Let's say you have a CEO on this webinar right now who's like, hey, I probably should think about it, but where do I start? What advice would you give?
Start with the year that we're in now, right? We're in 2025. So start working to make sure that every month you're closing your books and you know what's going on every single month for the rest of 25. Right now, you could go back and do January through April just to make sure that your 2025 numbers are clean and healthy. If there's any issues on your balance sheet that you think may come up or questions that you had during your last tax return preparation, figure those out now and make sure that you have a clean set of books, like I said, monthly or at least quarterly, that you can say, hey, you know, these are a clean set of books, and talk to your tax preparer now, to figure out what your quarter one tax payment should be if you haven't paid it yet. And each quarter, talk to your CPA and get the actual amount that you should be paying for taxes. Don't pay based on estimates from last year, because then you are probably either overpaying or underpaying your tax return or your tax liability. And then what happens is the surprise. Either a lot of people are getting a $20,000 refund because they're overpaying. The bad thing there is you're giving the IRS or the state a free loan, no interest, and you could be using that cash in your business. You shouldn't be giving them that. You could be investing, you could be hiring. There's a lot of things you could do with that money. So just pay them what you need to pay them, and you do that by keeping up your books regularly and making sure that things aren't a fire. There's no fire. January, books are closed. We're done.
Yeah. Greg, what would you add as far as, you know, advice to folks this time of year related to the taxes?
Yeah, I mean, I provide a lot of clients with adjusting journal entries that we make as part of the tax return preparation, and the number of times I provide them and then they go nowhere. They don't actually get applied to the books. So then you know, a year later, it's kind of the garbage in, garbage out rule of all of a sudden the same, you know, messy set of books are coming back to me to do the return again next year. And as I'm trying to clean it up, most of it is presentational, most of it is balance sheet related. But even still, sometimes there is an impact on the income statement just because of how the accounting practices are not, you know, properly being done. They're not properly being closed at month end or year end. And all of a sudden, that's where those surprises can come up. So to Becky's point, if you're not closing your books regularly, and by regularly, we mean monthly, then that's a practice that you should look to get into. And if you don't have someone that's already doing that for you, then look to engage someone that can help you do that. The benefit of actually doing that monthly is you have a greater chance at actually having clean books. We just see far too often, both Becky and I, the number of companies that fail to close their books on a monthly basis, to the extent that they can actually have clean books, is almost next to none. Because if you're not doing them regularly, that means when you want to actually pull up the financial statements and review them, you can't actually trust the numbers. And so to the extent you can start that process, to the extent that you can then get more on a GAAP basis, be doing accrual basis bookkeeping, get those practices and procedures in place, and now the better you're going to be suited for the remainder of the year, because now all of a sudden you don't have to do these year-end reconciliations to get everything into the proper positioning. Everything's already in the proper spot all throughout the year. So it actually is less work for you and your team to do it each month versus doing this massive overhaul at year end. And so that's where, you know, the tax return can get done sooner. We can do projections throughout the year. To Becky's point, from a cash flow standpoint, you can look at your financial statements each month and actually understand your profitability, actually understand your business cash flow, and then ultimately just make better decisions as an owner. And so I think that's something that there's an overlap there, that when we see the companies that have this April surprise, they're typically the companies that are less operationally mature, and therefore they're not able to actually make good cash flow management decisions that help them grow, expand, and scale their business.
And I want to add that, you know, we both talked about balance sheet. And I think one thing that is very common that I see is that a client will say, or a business will say, we close our books every month, or everything is clean. We're doing really well. And I look, and the P&L looks tight and clean. Everything's reconciled. You look at the balance sheet and there's a bunch of negative numbers. There's just like all of these liabilities or assets or current assets that don't really make any sense. And you start asking and they don't have answers, or they're from transactions from 2009. So I think that's something that a lot of people think that they're doing good in accounting because their bills are going out, their invoices are going out, their bills are getting paid, their employees are getting paid, they have money in the bank, but they're not looking at their balance sheet. And so is there something that they're not missing? Are they missing a deduction? Are they paying too much in taxes? Like there's something, if you can't look at your balance sheet and know what's on there, you're missing something.
Yeah. That's good advice. It also, I mean, messy balance sheets tend to create challenges for transactions too. So there's a lot of reasons to do this correctly. Obviously, the tax benefit, there's a business benefit too, even if you're not transacting anytime soon. Just a real quick pause here. So the trivia question that was asked, I think before some people jumped on, was what is the nickname that Becky gives her three sons as a grouping? And the hint is it's after a yummy dessert. John has a guess, Three Musketeers, which is a great guess, but it's not correct. So if you still want to give a guess as far as what would be the nickname of Becky's grouping of three sons, you should drop that in the chat right now, and you might win. Also, I just want to say you two are both better than my CPA TurboTax. So appreciate your expertise and advice there. Greg, you just got done doing a bunch of tax returns, you and your team at IT Tax Advisors. What trends have you seen this year? Maybe some unique challenges or opportunities that you're seeing across businesses?
Yeah, I mean, there's a lot of unique things we're seeing just from a true tax standpoint. We're seeing the R&D credit is a big issue with a lot of companies that like people have R&D spend, and it would be awesome to take advantage of the credit, and you still can. But the requirement to amortize that credit over 5 years is being a really big knock against even pursuing the R&D credit. So that's been a big one. That law is subject to potentially change here by the end of the year. So there's a number of returns we extended with the off chance that credit is changed retroactively to tax year 2024, rather than us applying for an amended return, which could take anywhere from 8 to 12 months is what my turnaround time has typically been for amended returns lately for getting those refunds. We can file it with the original return and therefore be able to get that refund within the standard, 7 to 14 business days after filing. That's been one. The other one we've just been seeing is just across the board, margins and profit has been squeezed, obviously, naturally with like inflation and whatnot. And so on the one hand, it maybe puts us in an overpaid position from a tax standpoint. But on the other hand, well, if we're now well overpaid and profitability is slipping, what can we be doing in the business to be assessing that profitability sooner, to be making better business decisions to hopefully help grow profit? And then could one of those decisions be taking a look at those quarterly estimates and reducing them so that you keep money in the business that you can reinvest? And this is kind of echoing what Becky said earlier, but being able to reinvest that cash into the business so you can now either, go out and hire another person, go do more sales and marketing, whatever it is you need to do in your business. But giving that the IRS or your local state authorities an interest-free loan just doesn't make a lot of sense. And I just saw too many companies this year where, numbers were down because I think a lot of companies faced the same issues with the election year. Some of the product sales were down in Q3 and Q4. I think, SLI put out that Q3 was one of the lowest quarters across the board for the IT services industry from a sales standpoint. And so when you think about that hitting all companies, well, that had an impact on their taxable income. And then quarterly estimates weren't reconciled or adjusted appropriately, which then caused cash flow issues and concerns.
Becky, anything else you've seen related to maybe trends this tax season versus others?
I feel like this year, a lot of people seem to be, an expert, or they like really feel like they understand all of the tax issues that are going on in influx. And we have a lot of clients arguing with us about what's going on. It's funny. It's like they read something, and I think it probably, social media and the more information that's out there, they see an influencer or someone tells them like, oh, you can do this to save on taxes. So they have all these strategies that they want to do that don't apply to them at all. So, and I see that a lot of places. I think people hear these like TikTok videos or something talking about a tax strategy, and they go out and they're like, oh, I can do that. And then some of them try to do it. We've had clients who, they buy a new car every year because it's a tax deduction, and they don't understand that they have to recapture the depreciation. So that's kind of been something I've been noticing, is that too much information out there is actually hurting people.
We could snip like portions of this webinar and then put it on TikTok, and it would have the same credibility that way, right?
Right.
And it's probably AI. Yeah, I just blame AI for everything that's stupid these days, so it's making us less intelligent. But that's good. Well, we've talked about we've really kind of camped out on the tax portion of the importance of accounting was specifically related to taxes. But there's business benefits to having clean books, hygiene, line of sight in your business. Maybe talk through, I don't care who goes first, Becky or Greg, about the benefits, the business benefits of having great financial hygiene and what you can do as a business owner when you've got those pieces kind of buttoned up.
Yeah. Okay. Well, definitely you can use the data to make decisions. Am I charging enough? Like, are my engagements profitable? You can look at that if you're tracking information correctly in your PSA and that is flowing correctly through your financials. So looking at the profitability on a client level, on a service level, making those decisions, deciding whether or not your marketing is effective. So the dollars you're spending on marketing, what is the ROI on those dollars? And those are all, how much do I need to be making before I need to make my next hire? So utilization. There's a lot of factors that using your financials and past data can help you with, where those businesses that are constantly playing catch up, they're still doing the work. They're still getting the accounting done for their taxes. They're still paying their bills and everything. But if they're not doing it in an efficient, clean way, then there's no clean data to use. So they're still doing the work. They're probably still paying someone to do the work, and they're not getting as much value out of it as they could. So I think my advice would be, if you're going to pay someone to do your accounting, or you're going to do your accounting, make sure that you do it in a way that you can get business value out of it, not just tax value.
That's good. Greg, thoughts on that or others?
Yeah, just the one other lens of value proposition, right? There's the tax value, there's the business value, and then there's just overall just value in terms of like a transaction value, that everyone is going to do something with their business at some point. You're either going to die running your business, you're going to sell it, or you're going to transfer it over to, maybe within the family or whatnot. And so when you're thinking about a potential exit, having clean books, that is like going on a first date, and that's your first impression to any prospective buyer. Also, if you're looking to grow your business and go out and get a loan to go do acquisitions with, that set of financial statements is your first impression to the bank. And so you might be the best salesperson and be able to talk it with everyone, but everyone's going to say, well, show me your numbers. And the numbers is where, what you're saying about your company really comes to life and gets backed up by fact. And so if those facts don't align with your story, well, then we need to change your fact pattern. And so I think I tell that to companies a lot, where it's like, when I'm doing evaluation, I want the numbers that I am seeing to tell the story that you just told me. And if they don't, then let's change those numbers. And that's where I think it's imperative to have, whether it's Becky and her team or whoever is in your back pocket that's doing your bookkeeping and your accounting, you want them to be aligned on what is that story you want your financial statements to tell, what information do you want to glean from your financial statements, and then ensure that your financial statements are put together in a way that you're getting that information out of it. Because if you're doing that, it's going to increase your overall ability to make business decisions, which is going to inherently increase your value if you are looking to potentially exit in the foreseeable future.
Yeah, I think I think about our line of work, Greg, where we're often bringing sellers to market, and sometimes it can take 2 or 3 months to get the financials ready just to take to market, and that could be $10,000 to $20,000.
Yeah.
So would you rather spend that money strategically when you've got the time to invest in your business and to give you all the business benefits, line of sight, data-driven decision making? You can understand your operations through a financial lens, all those benefits, and then you created a value by doing it earlier? Or would you rather pay it at the very end when you're already like trying to maximize maybe this is your exit, this is your retirement? And so there's a lot to think about there. And then I love what you said about it's the first impression for a buyer. It was love at first sight between my wife and me. For me, it wasn't for her. I had to kind of like I had to woo her over time. It took a little bit of effort, okay? And so, but it's just easier when it's just love at first sight. And we want to create a financial package that makes it love at first sight between buyer and seller. One final question, then I'll let you guys go, and we'll get to the trivia question. By the way, we don't have a correct answer yet. So if, again, what's the nickname? Think of a dessert. Think of Becky and just her name. I mean, that might give you a little bit of a hint. What does she nickname her three sons? So it strikes me as you guys talk that
I
a
want to
lot of
add
business. Yeah, go
I
ahead.
just want to add one thing. We didn't talk about, and this is really important, is employees don't, or companies have a hard time with getting paid. And I think it's really important that people have agreements with their clients to auto pay and not expect and get rid of AR. AR should not exist in professional services companies. There's no reason why you should have accounts receivable, and we or other accounting firms should be able to help you eliminate it completely by auto pay.
Yeah.
Yep.
Yeah, that's a great piece of advice, and it strikes me that most business owners we talk to didn't grow up and have aspirations to be an accountant, a CPA, or to work at a tax firm or advisory firm. They're good at what they do, and they've built a business. Maybe even scaled the business and grown it, and maybe they've done great in sales, or they're a techie person, but this is not what they were trained to do, right? And so there shouldn't be shame in that, obviously, because it's like that you haven't received the training, but surround yourself with people who have that training. And so let's say that we have one of those people on the call today, and they know their books need help. They know they need to work. They don't even know where to start. So maybe something they can do by themselves without paying either one of you guys. Something they can do right away that will impact their business and create value for them. Becky, I'll let you go first then, Greg.
Yeah, I think if there is an AR problem, which is I see a lot, putting a payment portal in place. There's tons of them out there, and they are pretty easy. They connect into your QuickBooks or into your PSA, and you can get it into your agreement that they auto pay you. You can still send them a bill so they see what's on the bill and give them, time to ask about it. But, send bills on the 1st, auto pay on the 10th. Payment's going to process on the 10th. And then your payment portal should do all the following up, all of the, if something doesn't work, getting the new information. So it's definitely something that I feel like anyone can do it on their own, especially if they're already doing their own accounting. And yeah.
Great.
And what really works is if people are sending you checks, tell them that you're going to start charging a $25 processing fee for checks, and they'll never send you a check again.
Yep. Love that. Yeah, and I'll just piggyback on that, just from automating your processes. So whether that's you're using QuickBooks and you have rules set up, or you're using an AR portal, or you have some sort of automatic payment. I think to the extent that everyone wants to, if you're going to manage your own bookkeeping, setting up automation is key. And that starts with having your PSA tool set up correctly, with then also having your QuickBooks set up correctly, with having all those rules set up correctly. And I think what you're going to find when you try to go through that process and set up those automations yourself is it's all great in theory, but it is a lot easier to actually have someone else do it for you and with you as kind of a partnership. And so that's where like Becky and her team are a great resource to really come alongside you and really start from that ground zero, like in the PSA tool, all the way through your accounting software to make sure that all those automations are set up correctly. We internally here are setting up a brand new accounting platform, and it has a lot of automation features, but I can't figure out how to set them up on my own. Like I need their consultant to tell me how to do it, and so I think that's something, like, take a look at that, and you might quickly find that it's just easier and better use of your time to engage with someone, get those things set up, and then it's going to be just like clockwork. Every month you just have proper financial statements because you had those things in place, and then your cash flow is going to be overall better as well.
Think of it like when you get your house cleaned and you go out and you come home and your house is clean and you didn't have to do any work, and it feels so good. It's the same feeling, right? You get this set of financials and it's like telling you all the things that are going on in your business, and you didn't have to do that much. You had to approve a few bills, you had to approve the payroll,
Yep.
But most of the work is getting done. The money's coming in and going out without you having to do anything.
Yep. And that's really how we found out that Becky's sons are the ones who clean her house. the brownies. And she's like, I have a professional house cleaner. It's called my son's. Hey, real fast as we wrap up, if you're interested in learning more about our valuations as a service platform, Greg runs a great team that helps track value creation quarter over quarter, year over year. And we identified 24 company-specific risk factors. Maybe AR aging is one of yours. And if it is, love to have some conversations around that. Also, if you're in need of a CPA, obviously IT tax advisors can help. Greg, was it 70% of CPAs are going to retire in the next 5 years?
Yep.
The average age is, I think, around 317. So there's opportunity, I think, for and Stride, of course, can help too, depending upon your needs. So feel free to check that out. And then we did get the winner. I think it was Niles who correctly identified brownies. So I'll be in touch with the Amazon gift card, and really appreciate everyone who jumped on to join us today. Becky, great content. Greg, fantastic as always. Wishing you all a great end of your week, and we'll see you hopefully soon at one of these events. Take care.
Thank you.
Awesome. Thank you.
Bye.